Okay, peeps, welcome back. So today we're going to be going over a market analysis overview for the month of September in 2023 on the SPX chart and our overall macro view of what we're looking at here. So let's get it. So as you guys can see on the chart here, we have the SPX. This is the actual stock market. You can see here it says S&P 500 Index. The one that we usually track is the ES or the MES, which is the mini and micro futures version of the underlying index, which is the S&P 500. So what do we have here? All right, so we're looking at a few things. You guys can see that we got this macro uptrend here, basically indicating over the last several years we're in an uptrend. And then you got this smaller uptrend here indicating that from the bear market lows of last year that we're still in an uptrend. The EMA is confirmed we're in an uptrend. You had a golden cross roughly about right here in looks like, well, maybe right about right here in January of 2023. Since then, we've been moving up all the way back into previous all-time highs. We had the MACD golden cross down here on the weekly in about October of 2022. Funny enough, this thing actually almost perfectly coincided with the bottom of the bear market lows last year. And you guys can see that we had the golden cross here on the RSI as well, right about the lows. In order for the RSI to flip from bearish to bullish territory, basically what we're looking for is a golden cross on the RSI. And then if you guys can see here, I'll zoom in a little bit so you can see this. We want to see both of those lines pretty much above and holding above the 50 level. So that would indicate right around here on the chart in February, March of the charts in the RSI. And above the zero line on the MACD, that was indeed a confirmation of a bullish uptrend. So our major macro support levels here on the SPX is basically sitting roughly around 3,400, which was the previous peak before the zombie virus dump. Can't say it here on YouTube in case we ever get monetized. We don't want to get demonetized because we're saying the wrong things here. And then you have this resistance level, which we wouldn't have known at the time that it was going to be a resistance, but the market showed us in hindsight that it turned out to be resistance flip support. So this would be your macro support level from the zombie virus dump to the bear market low last year, flipped into support. And then we have this next support level that sits at around 4,200 or so to about 4,324. As you guys can see here, it kind of tested it for a while, got held down, then broke out, bounced, tested a support, came back down, tested a support, then it flipped into resistance. And then once again is now testing as support. So you guys can see this area right here with this middle zone is a very heavily traded zone. And we have the highs up here at right around the time that the Fed announced that they were going to raise rates in November, December of 2021. We have the peak at 48. I believe the exact number is 4808. And our first bear market rally, as they would call it, or suckers rally, pretty much all the way back up to this now resistance level at roughly about 4,600. So what are we looking at here? So we got this peak down to the low of the downtrend. We're going to change this to red so we know that it's actually bearish. So we kept smacking our head basically against this trend line moving down here. As you guys can see, there was kind of a double bottom that formed here. The indicators on the RSI and the MACD flipped bullish. And then we broke out of this trend line. We came back down, kind of more or less tested it here in February and March. That's when we got the golden cross and the move above the 0 and the 50 on the RSI and the MACD. And then we've been bouncing off of these support levels ever since. So what can we gather from this on the charts? So basically, more or less, I guess it can be kind of summarized that pretty much the bear market ended last year in this downward microphone pattern. We broke out of it, moved up. I think pretty much everybody in the year of 2023 was thinking, hey, it's 2023. The Fed's been raising rates forever. We can start moving up now, right? Because they're closer to the end of their Fed hiking cycle than they are to the beginning. It's a new year. 2023 is going to be really bullish. Markets typically trend up in January. That's usually how it goes. As you can see here, January 2021 pretty much went up. You got, well, I mean, it was trending up in January of 2020, but we all know what happened here. And then if we look at January of 2019, same thing, started moving up, and so on as history goes back. Now, another thing that I want to point out to you guys is the EMAs here. You can see that the EMAs are holding as support on the weekly time frame. This is a very bullish indication. Basically, what we would be looking for a golden cross setup, assuming we wanted to trade the SPX, is the golden cross. And again, I don't trade the weeklies. I trade the 4-hour chart for swing trading, but the golden cross, it crosses up. We want to see it hold a support or some other support confluence like these trend lines right here. And then it moves up, closes above, retests, then keeps moving up. That's what we want to see for a bullish setup. So the EMAs confirmed that we are actually still in an uptrend in the markets. Now, I'm going to go ahead and remove these indicators, and I'm going to throw in some different indicators. So we're going to use the simple moving average times 3. We're going to switch the first one to a 50 moving average. We're going to change the color here to gold. And we'll switch the second one to a 100. So that would be your 100-week moving average. We're going to put this one as white. And the third moving average that we have, we're going to put as a 200-week moving average. And we're going to change this one to, we'll do green, since that would be like your macro buy signal right there. So I'm actually going to get rid of some of these trend lines we got here so it's not so confusing to look at. And then you guys can see what I'm really talking about here when I say that this is my bull bear market indicator right here. All right, so you got your 200-week down here. You got your 100-week SMA as the white one and the 50-week SMA as the gold indicator. So what exactly are we looking at here? Basically, the overall perspective here is that we are looking at the 200-week moving average. The reason why I use the 50 and the 100, as you guys can see in previous years here, it did hold up as support. When it moves above those, obviously we're clearly in an uptrend. When it holds it, we're in an uptrend. So that's kind of the more short-term time frame bullish indicator, but the long-term one would be the 200. So we had this move down from the Fed announcing that they were going to raise rates, and then they did actually raise rates in March. That's when we tanked. But if we really zoom in here, you guys can see that we pretty much almost perfectly bounced off the 200-week moving average, and we have been holding up ever since. If we go back in history, you can see that we kind of moved below it here. Again, this was a black swan event, so it's not going to play out perfectly. This was the last time that the Fed raised rates in 2018, and the president at the time was like, no, you need to cut rates now, and then they did, and we bounced and went up. Again, in 2016, we went up. And 2011, after the great financial crisis, we also went up off this 200-week moving average. So this is basically the macro bullish indicator for the SPX. If we were looking for a major dump in the markets, what would we be looking to see here? Basically, we would want to see the price action close below, retest, and get rejected off the 200-week moving average. If you guys look at the 2008 chart here, you can see that's exactly what happened. We had a huge drop. The drop was roughly about 48% from that retest rejection. And a very similar thing also happened here during the dot-com bubble, although this was not exactly the same. We had like a fake out to the upside and then a close back down below. From that point, we dropped about 37%. So this indicator has been very, very accurate pretty much over the last 23 years. So if you guys are looking for whether we're currently in a bull market or bear market, technically speaking, we are still in a bull market, according to this bounce in October of 2022 of last year. Does it mean that the markets couldn't go lower and fall below this 200-week moving average? No, but this is based on probabilities. The probability is near 100% that we're just going to keep going up. Now, something that I also want to pull up for you guys, which is a metric that I have not talked about on this channel yet, is the CME futures settlement quotes. So what exactly am I talking about here? Well, first things first, let's take a look at what the CME group is, okay? So we'll go over to Google, we'll type in CME group. So the CME group is basically headquartered in Chicago. It operates financial derivatives exchanges, including the Chicago Mercantile Exchange, Board of Trade, New York Mercantile Exchange, and the Commodity Exchange. And the company also owns 20% of the S&P Dow Jones. So these guys are kind of a big deal, okay? They were founded in 1898. So we're going to actually compare another metric here. We'll go back to Google, type in how long has the Federal Reserve, let this one been around. Federal Reserve was brought into law in December 23, 1913. So as you can see, the CME has existed for decades longer than the Federal Reserve has. So these guys know their stuff, okay? So the point I want to make on this is let's take a look at what the forward projections are for the CME and what they expect the markets to be like going into the future. Again, I don't know if these are exactly settlement prices or just quotes on what the settlement price will be in the future, but if you guys know anything about futures, basically pretty much what it is it's exactly what it sounds like. It's a price agreed upon in the future between a buyer and a seller of an underlying commodity and or whatever is being traded. Foreign exchange, gold, silver, oil, cattle, you name it. So what we're looking at here, if you guys can see, this states the prior settlement. So I guess perhaps this would indicate that it's already set in stone. They have agreed upon a price in the future. The futures price of the SPX, which the E-mini S&P 500 is the futures version of the SPX. Assuming that the two were to move synonymously, the SPX would move up with these prices. So it says in December of 2023, we're basically going to be flat compared to what we are now. You can see 44.57 will be slightly up. March of 2024, we'd be at 45.57. June, we'd be at 4,600. September, we'd be at 46.57. And by the end of next year, we'd be at 4,700, scrolling down even more. By the end of 2025, we would be back at all-time highs, and we can go even further out here. You guys can see the prices going into the future. So the CME projects that we're basically supporting our bullish theory here, that the markets are just going to continue to go up. They may find some resistance here at this resistance level, but in theory, we're just going to keep going up. The CME supports it. The technicals support it. Now the Fed is raising rates. The economy theoretically is slowing down because that's what the Fed funds rate effect has on the economy. So there's one more thing I want to take a look at. Just to kind of wrap this video up to give you guys another indicator. Again, if I go over everything macro related, this video is going to go on forever. So I'll be splitting this up into more or less a segment, and I'm going to try to get one of these macro technical analysis videos out for you guys every single month. Since we're in a Fed tightening cycle right now, I think this is important. But if we take a look at the weekly chart of the VIX, which basically measures fear and greed in the market, and we take a look at the SPX, you guys can see that every time the VIX spiked, well, hold on a sec. So pretty much every time that we were at a peak, the VIX was at a low. Every time we were at a low, the VIX was at a peak. We got another peak here, as you guys can see on the right. The VIX was sitting at about a 20, and then we went down. The VIX was sitting at a 35, and it goes so on, so on. So we got our lowest point here. The VIX again is at 35, and pretty much ever since then, the inverse correlation between the S&P 500 and the VIX is that the S&P has been going up and the VIX has been going down. Now, what would we want to see to indicate that we're about to go into a huge, massive market crash? Well, pretty much we would want to see something like this. You see the VIX all the way up here at 85, and you can see on the SPX that we had the zombie virus up. So there's that. If we go back even further in time, we really got to zoom out here a lot to see this. Let's scroll back to the last time the VIX had a huge, massive spike. It's sitting at about a 90. That was pretty much almost exactly at the lows. Looks like maybe a few months later after the lows of the SPX at that point in time. So to sum it up, if we were looking at a huge crash, the VIX would be somewhere between basically about a 40 to a 50, maybe all the way as high as an 80 to a 90. And then in correlation with that, stocks would move down as the VIX moving up. Now, if the VIX is moving down, we expect stocks to move up, exactly as they've been happening currently. So SPX moving up, VIX moving down. And that pretty much wraps up the video. As you guys can see, for the month of September, we have had a little bit of a drop here in the markets, but then we've recovered a little bit. We measure from the low to the high here. You see we went down 5% and then we went back up 5%. You get your projections here on the CME Group website. Everything looks bullish on the charts. The VIX is moving down. So this is the month of September. We'll do another one in October, and we'll try to do one every single month going forward. I hope you guys enjoyed this content. Please like, comment, and subscribe. It takes a lot of work to make these videos, so I hope you guys appreciate it. And I'll see y'all later. Peace.